us tonight. Please sign the sign-in sheet that's going around and make sure your phones are off and keep eating and enjoy the Chick-fil-A. So I'm going to hand it off to Hank and he will introduce our speakers and get it going.
Okay, thank y'all. Thank y'all so much. We're from HRK. Really appreciate y'all having us. This is one of the first times we've ever done a presentation for Bay Alpha Side here, so hopefully it's informative and not too dull, but filled with good information. So we brought a couple different people from all different backgrounds and areas and kind of what we do. Harrison Bryant is a CPA, actually got his undergrad here at Ole Miss and works in, does a lot of different things, works in our SOX compliance area, does some tax work for us, and in a former life worked in our farm credit area. So he brings a lot of knowledge. He's probably been with us 3 or 4 years, or you're going on 4. Okay. So, and then we've got Steve Solomon, who does some governmental compliance work for some state agencies. He's done some federal government work recently. And Steve got his master's degree from Ole Miss, and he has been with us probably about 3 years. Going on 3 years. Yeah, I'm trying to keep up with this. You have so many people come through. Robert Montgomery's been with us for about 2 years, probably. Am I getting these right? Close. Robert's been with us about 2 years, got his undergrad and master's here at Ole Miss, and he works in our farm credit area. And is actually going to bring a lot of good stories about fraud-related topics that we specifically deal with there. And Julia Bradley is a manager who's been with us about 5 or 6 years, and she works in audit, compliance, nonprofit. She does some work with churches, some federal government work, pretty much jack of all trades, just point me in the right direction and leave me alone, let me do my job. It's kind of, Julie's really good at what she does, and she also helps with a lot of our recruiting and things like that, so she's going to bring some good information from that. And then Sarah Martin Tucker just graduated from MC with her master's degree, but got her undergrad here, and so Sarah's just newly started and is actually going to kick us off and tell us, so I think what we were kind of told to talk about was fraud. What is it, how does it happen, and how does it affect us? And so Sarah is going to come kind of from the angle initially and tell you, a textbook definition of fraud, so to speak. But we're going to take an approach that more or less tells you what you need to know for the CPA exam, because that's kind of the end game for all of you anyways. So there's certain answers and certain definitions that fit that profile. And so I think Sarah's going to tell you about that and then kind of tell you how fraud happens, and then we're going to kind of dive off into different practice areas and tell you a little bit about how it affects us on a daily basis.
Yeah, so I just took the CPA exam, and I went back and looked, and I think the audit section is really what covers fraud the most. But it's, baseline what you'll probably all learn. So I see the fraud triangle, the incentive, opportunity, and rationalization. So incentive is, a reason and opportunity to commit fraud, lack of controls or plan to override, and then rationalization is, some people's values might be different, and they can rationalize in their head, okay, it's okay to commit fraud. And then,
There you go. The exam, there's so much depth of information that it's hard to remember it all. So.
yes, and so the 2 types of fraud it covers the most are misappropriation of assets and fraudulent financial reporting. And so misappropriation of assets is what you'll probably think it is. From stealing inventory to forging a check, and stuff like that's really easy to get by, especially on the management level, because stuff doesn't get caught unless it's above a certain threshold or things like that. And then fraudulent financial reporting would be lying about a number on a financial statement or using accounting principles wrong, anything to misrepresent what you have. And so in an audit, you're trying to make sure a financial statement is your reasonable assurance that it is free of material misstatements. And so,
and some of y'all who have worked through the audit side, I think will attest to this, that financial statement fraud, obviously it is what you think it is, but for the most part, it's the frauds that you hear about are far more common misappropriation of assets, because it's the width or the of the amount of that type of thing that can go on from, getting as simple as stealing company assets or misappropriating hours or time that you've worked on something. I mean, there's so many more avenues and ways to commit, quote unquote fraud in that arena versus outright putting a different number on a financial statement, I think is probably.
Yes,
That makes sense.
and on the financial statement side, it's probably more prevalent to happen in an area that is more subject to management estimates or bias. So those would be things like the allowance for doubtful accounts, depreciation on a much smaller scale. So there's certain areas that just by the nature of them, it's not a hard and fast, this is the value of this amount. And so as a result, there's more opportunities for management to come in and manipulate some things to make the financial statements look a little bit better, especially if there's an incentive, extra bonus at the end of the year or something like that. So on the audit side, we really focus on the estimates and making sure that there is evidence to back up that amounts that they're giving us and using in their financial statements.
And it's never gonna be clear because anyone committing fraud is, obviously has a plan and, okay.
Well, like if you're, fraud is not something you just think up
Yeah.
on the cuff and
Yeah.
say, hey, I'm gonna go just commit fraud today. It's a willful neglect
Yeah.
of your duty and what you're doing. And I think that's probably the main part. But y'all, I know we've got different age groups. We've got juniors, seniors, and graduate students here. So y'all, some of you are in graduate auditing, some of you are juniors, and you're literally probably in intermediate 1, intermediate 2, some other courses. So some of you have had auditing, and you probably, already been given the textbook definition of fraud, and you know all that. And then to some of you, it's brand new material. And so one of the things that we want to kind of convey as we go through this, we're going to talk about the different areas that we operate in. And for the most part, I was kind of surprised when we sat down to talk about this. I primarily work in our tax department. I do some litigation consulting work and have enough of a background in IT to kind of know some of that stuff. For the most part, I don't have these great examples of, I caught this client and they committed fraud and they're in prison. And nobody in our firm really has that, but I was impressed with kind of some of the stories that these guys had where they could actually bring some textbook examples. It's probably just because of what they're working in, because from a tax standpoint, if you think of, fraud from the tax side, it's tax evasion. And for the most part, if you're a tax accountant, you don't want to work with those kind of people. So you kind of steer clear of that. So for the most part, tax doesn't have quite the same level of stories, but Harrison's worked in our tax department a little bit, but I know he's also done some SOX compliance for financial institution, and he's also done farm credit. I don't know what kind of stories you may
So I
have.
started out in farm credit, and it's kind of a little this thing our firm does. We go into these farm credit banks across the country, and we do a review of their internal controls. And it's kind of snowballed into this new deal called ICFR. That might be a new hot buzzword, internal controls over financial reporting. I mean, PCOB is just hammering that right now, and for good reason too, because one of the best ways to mitigate fraud and to prevent fraud and to catch it on the back end is to have a solid foundation for your internal controls, to make sure that you're going back and you're checking and you're making sure those internal controls are efficient and effective. And so that's part of what the Farm Credit IOR team does. And they also do credit reviews where we pull samples of loans from loan officers. But anyway, that has kind of pivoted into a little SOX compliance team that we put together recently. We go to other banks, not just farm credit banks, other financial institutions, and we make sure that they are adhering to all the SOX regulations, which are basically internal controls. You have these controls in place to catch and prevent fraud, and so that's been a lot of fun. It's been a great learning experience trying to help rationalize these frameworks, make sure everything is operating correctly. But the testing's fun. And one of the things that I kind of ran into this past year when we were doing some interim testing is, so this financial institution that we're working on has a trust department for all of the client, they're the trustee for a bunch of trusts, a bunch of private wealth, Taylor wealth kind of stuff. And they had a new trust relationship manager who was still kind of learning the ins and outs of things. And it just so happened that it timed up, they got a couple of requests from the customer, the bank's customer, to wire, X amount of dollars to this account, and they gave a reason for it. And that new relationship manager wasn't necessarily trained up on everything as she should have. And so typically what you have is there are multiple different types of wire transfers that you can make within these banks. And so each type of transfer, whether it be an internal transfer or customer initiated, international transfers, they're all subject to different kind of thresholds that you gotta watch for. And some of those are federal regulations that they put on, and then other ones are just kind of internal policies that they maintain to make sure that everything's good. So anyway, the threshold for this certain type of trust wire was $20,000, and this relationship manager was getting several wire requests for this customer, anywhere between $14,000 to $18,000. So it was just right under the threshold to perform a callback, which is one of the major internal controls to prevent this exact kind of fraud that was going on, where you get a wire request from the customer, the relationship manager automatically picks up the phone and calls the customer back at the phone number that they have on file to make sure that, hey, you actually requested this wire before we complete it. And so anyway, they were getting these funding requests just under the threshold, and a couple months happened of it, and the relationship manager finally called on and realized that, hey, this doesn't look right, having these wires to go out in this kind of way. This is unusual for this customer. He did kind of account analysis and realized the customer didn't really do this historically, and so they dug into it, and they found that those wire forms they were getting, although they looked really good, were as fraudulent as could be. And so the bank, this is something they call internally. We didn't actually catch them. Our part of it came in on the backside and making sure that we were testing the new control that they had in place. So they discovered this, and they came up with a plan to remediate it, and that included lowering the threshold and adding another quality assurance reviewer of the wire form to make sure that everything was checked off, and that the relationship manager, the wire receiver, and the approver have all covered all their bases. And that's, by doing that, I mean, we've tested it since then, and we actually focused a lot within this relationship manager specific wires, and everything seemed to be good to go with just lowering that threshold. And so the total amounts received, or actually paid out, was under $100,000, which seems like a lot to us, but to the bank it wasn't really much. It's nothing that would require any kind of restatement of financials. It was way under any kind of materiality threshold. So that's the kind of fraud that you like to see them catch on the inside and make sure that they resolve it and catch it. But it all comes back to your internal controls. And I know that's, when I took the exam, that was a big portion of it, but I feel like I heard they've been hammering that a lot more lately. And that's a good thing, because you've seen all of these regulations come out, as in Sarbanes-Oxley and ICFR. All of that comes out as a result of these fraudulent, of these companies making these huge fraudulent financial accounting reporting errors. But it also is because there's just, with the web access that you see, we're constantly seeing more and more of phone requests, email requests, anything like that. It's just super easy for you guys to come in. So that's my story from our financial institution. I know Robert is also on Farm Credit, and they've run into a couple of really interesting things in Farm Credit. I'm gonna let him.
So a little bit more about Farm Credit. You probably haven't heard of Farm Credit, and basically what these are cooperative banks where the borrowers, each time, whenever they get a loan, they buy in stock to the association, and they actually, each borrower owns a portion of the association, and they fund primarily farm operations. They do rural home loans, they finance recreation property, and so we are basically there for a number of these associations, their internal auditors. And like Harrison said, we do credit reviews, so we take a sample of their loans and we review their loans. One, to make sure they're making good loans, that their borrowers are going to repay their loans, and two, that their loan officers are complying not only with association policies, but also with the regulations from the government down. And then we do internal operations, which is basically just to make sure they have controls in place within their bank operation that fraud will be either prevented or detected. And so that's where we come in and we test the controls. And at first when I started, I didn't really see that big of a risk for fraud. Most of these loans aren't that large. Some are. But then as you go and visit these various places, you realize that most of these farm credit associations are in small towns. The credit officers know their borrowers, and farmers in particular are in a tough time right now. And so the credit officers want to help out oftentimes they're friends who are in a tight spot. So then you go back to the fraud triangle, and there's a perfect opportunity and rationalization to commit fraud. So it can be as simple as a father and son farm. The son has poor credit and is out of money. The dad has good credit and doesn't need the money, and the borrower, the son, can't get any more money, but he has to pay his debt down. So you make a loan through the dad and cut the check to the son, and then the son pays off his loan. So we see that not too often, but it's something that we've really been on high alert doing our credit reviews. And there's been a couple instances where we've noticed cases like that where we've said we're making a loan to John, and then we go in and look at the check, and the check's going to Jim. And so there we had a client where we noticed that, and they also had kind of flagged this loan officer because he had a lot of loans that they were losing money on, and that resulted in us coming in and doing a review of, I think, 3 or 4 years worth of loans that this guy had made, and I think there were maybe 3 out of a sample of 70 that didn't have a problem. And so that's one way that we were able to come in, and we identified the problem. They had already had it on their radar, and then corrective action was able to be taken to try and mitigate the losses. A bigger fraud instance we had with one of our clients was probably about 5 years ago. This client had a branch manager who made the decision that he wanted a little bit more money and was going to start committing fraud. So he started making fake loans. He had a friend who was a banker in another state, and somehow this guy managed to create a lot of fake documents. He had fake credit reports, fake financials. He had a stamp for deed of trust for a mortgage to property. And what he would do, he would find existing borrowers that were partnerships. He would take one of the individuals out of the partnership and make a loan to the individual, create a whole loan file for the individual. And obviously with the partnership being there, the individual's financial statements could be easily duplicated and numbers could be changed a little bit to look current. And he would make a loan to somebody who was already, in essence, a member of the association. And then he would have a check written. He'd have the processing department write a check that looked correct, scan that to the loan file, and then he'd have the check canceled and tell the loan processors that something was wrong. We actually need to make this change and write the check to this bank. The check would be written to the bank that his cohort worked at, and then the guy at the bank would deposit the check. And they got
we should have probably brought a diagram or something. This is kind of getting.
And so anyways, it ended up being about a $2 million fraud. The guy got 2.5 years in prison, was forced to pay, I think, $2.5 million in restitution. And so that was a big fine. And
This is pretty relevant. His decision tree there at the end.
yeah,
Incentive not to.
once the branch manager realized that he was in over his head, he couldn't keep things straight anymore. He had historically showed really meticulous attention to detail. For example, there where insurance was required on equipment that was fake equipment that was pledged as collateral, and he falsified insurance documents and knew that insurance documents come in the mail. So he took the time to take the fake documents, fold them so they'd have creases on them before scanning them in and putting them in the loan file. But he made a decision tree once he realized he was in over his head and weighed the options of how to get out of his big fraud scheme. And thankfully, he didn't have to follow his decision tree. He was caught before he could take action on either path of the tree. And I think he is now happily selling equipment somewhere.
So what happened to the guy at the bank?
He kind of ratted out his buddy.
I was going to say, somebody got scared.
Yeah.
So they, the way they called it was, once you buy in stock to the associations have a board of directors, and each member gets to vote on who's appointed to the board of directors. And the bank noticed a lot of unreturned ballots for the vote and began digging in. And we actually count the votes for this client. All the ballots come to us, and the abnormality of this disproportionate number of ballots that went unreturned was investigated and got was called. So that's just something that kind of we don't deal with stuff that big on a regular basis, but it's very pertinent to the work we do, and
Always on the look for it, maybe
Yeah.
not find it, but.
yeah, and looking at something as simple as looking at who they said they're making the loan to versus who the check was actually going, who the check was written to, is just a really basic, easy way to find something.
Yeah. And you're working in that farm credit area, and I know Harrison came from there, and so Harrison, you kind of learned a lot of the internal control, implementation strategies that you know through that. So when you got to the financial institution, and we've started, and since we've, that's morphed off into multiple places where you're having to create this internal control set up from nothing. Am I correct?
Well, they
What's
have-
the most complex part about coming in and being, you come in on the farm credit side and something's already in place. They're already
Yeah.
used to it. With these
They got
financial
testing work
institutions, it's brand new to
They
them.
had, their internal controls were in place. They did not have testing work papers on how to effectively test these controls that they were doing. And so that was part of a big thing. But in order to build a testing work paper, there are so many areas that you gotta hit. When the biggest, nastiest thing that we run into is proving completeness and accuracy over your sample data reports. That is huge. And everybody wants to make sure that you're doing that now. But as far as the framework goes, we probably spent a month and a half just sitting down, running through with the client, walking through their processes and making sure that they provide these narratives, which are basically executive summaries of how the process works, who's responsible for what. And we sat down a month and a half with them and went through and made sure that this process was acting and operating effectively, and that it was relevant to preventing or detecting fraud. And trying to figure out actually what to test was a big challenge for that, because there's so many reports coming from so many systems. But it all kind of wraps up, and I'm just going to break off real quick. It took me probably 2 years before I actually felt like I knew what I was doing.
What internal control
And I still don't know. I feel like I know what I'm doing. It's all a learning process, I guess is what I'm saying. And you've got to stay sharp, constantly involved with it.
It's an enjoyable occupation for that reason, though, because you're never going to get to a point where you walk into your office and sit down at your desk one day and say, I think I've got it. Like, I can't learn anything else. So if you're, for the most part, you wouldn't be in accounting if that wasn't if you weren't a driven person, so to speak, from that mentality. And I think that's to me at least, that's what makes the career, fraud, no fraud, whatever, it makes it entertaining, or it at least gives you some drive to get up and go to work every day, because there's always something changing regardless of what regulations are coming out or what industry you're working in or what you're doing. But Steve, I'm gonna shift over to you. I know you work in our compliance area, do some governmental work, federal, state side. Tell us a little bit about that.
Yeah, so like they said, I work mainly governmental compliance, so kind of like the farm credit guys. It's another little niche that our firm is in. So basically you see all these big disasters that happen, Hurricane Katrina, Hurricane Harvey, Michael, all those storms. After those storms go on through and leave all their devastation, eventually the federal government comes and puts all this money into the area to try and help build it back up, build back up the economy in the area, help people that are without homes, that sort of thing. So after this grant goes and passes through and helps all the people that had to live through all that devastation, then we kind of come in on the back end, and all these requirements that they had to meet, spending all the money, different checks that they had to kind of pass to get the money and be able to spend it. We go through on the back end to kind of make sure, okay, yes, they checked all the boxes, they met all the criteria for what they were doing, and there was actually need for this money. So one area where they kind of encountered fraud, so the one issue that we kind of have is these grants are anywhere between a couple $100,000 to a few $1 million. And you've got this money passed through to people who aren't used to having this type of money, so they're kind of like, okay, well, how can I spend it? What do I need it for? That sort of thing. So there's actually one person, so these grants, I should also say, some of them go to businesses, some of them go to individuals. It just kind of depends where the need is. and who needs to use that money. And there was one individual who was heading up one of the businesses that got money, and they needed to look and see where all of her time was being spent, because this company had gotten money from our client, they got money from this federal agency. So whenever they're administering these grants, they have to actually allocate, like, okay, I spent X amount of time working for this grant, X amount of time working on this grant, so they know how much to charge towards the money that they got. So this person, they walked up to him and said, hey, we need to see spreadsheet, payroll, whatever you do to kind of track your time. And this woman actually handed them a piece of paper and said, okay, I did 60% of time for your grant, I did 30% of my time for this one, I did 20% of my time for this one, and I did another 15% for this one. So if you guys want to do math, a little quick in your head, that was about 115, 120% of her salary. So they ended up having to pay back, I think, about $100,000 worth of money that they got because they were misallocating her time and trying to see where she was working. Some other issues we kind of see where if you have these multiple grants going through, so you might get money from one federal agency, and that was 2 or 3 years ago, and the entity spent it on renovating their building. And then they get more money 3 or 4 years later, and they're like, you know what, I really didn't like how we did that, so they go and renovate the same part of the building. So the federal government's now paying twice for the same exact project. So that becomes an issue that we kind of need to go back in and look at a lot of invoices from years before and then current invoices. And one of the issues with that is whenever you've got all this devastation, a lot of records are destroyed and people are kind of having a tough time getting back on their feet and trying to kind of get back in the way things work. So a lot of the times we see some fraud like that, like they kind of said, it's not every day that we actually see that sort of thing. So we start seeing where there's, I guess, more abuse, which is kind of blurring that line between fraud and what's actually fraud and what's not really fraud. So that's sort of the thing that I see on the government compliance side.
Yeah, fraud as a whole, when you know, from the accounting standpoint, I mentioned something as technically by the textbook definition, a misappropriation of assets is taking a notebook from the firm that you don't own. Well, nobody here is I'm not gonna scream, fraud, you know, if you stole a notebook from, but I mean, that's kind of where it's a really, really gray area is what you end up finding. And so I think you see a lot of that there's probably a lot of incentive to do that sort of thing in all those areas. Additionally, I think that probably speaks maybe even larger in the nonprofit arena, which is where Julia primarily works. So talk a little bit about that.
Okay, so as Hank mentioned, I spend a lot of my time in the not-for-profit arena. And so we see misappropriation of assets, probably a lot more risk there than trying to manipulate the financial statements. They're not in the business of making money, so they're not trying to, you know, have that year-end bonus. So for them, it's more of the risk is misappropriation of assets. And so for us, I think there's been, over the last couple of years, there's been several instances that have made the statewide news locally, especially in the Jackson area, of not-for-profits where it's come out that misappropriation of assets has occurred, whether that's in the cash receipt cycle or in the cash disbursement cycle. And so in the way that we've implemented our audit procedures, we've gone in and added and tailored some of those so that we're making sure that we're taking the necessary steps, that if that's happening in the organizations that we're auditing, that we're going to be aware and mindful of that. And so as those news stories begin to break, it's really important for us to begin to understand as much as we can know about what happened and making sure that in the entities that we audit, well, could that have happened? And so the way that we go about doing that, and some of these guys have already touched on it, but it's making sure that we understand their internal control process and looking for potential holes in their internal control process. And so for us, oftentimes that means that the first day of the audit, we sit down with the controller or the bookkeeper and say, okay, tell us what happens when a check comes in. Someone's made a contribution to your organization. Walk us through that process. You check the mail. How do you enter that into your system? Who actually is the one that goes to the bank and makes that deposit? We have a not-for-profit that we're working on right now, and they asked us to come in and actually really review their internal controls. And so we had a young staff member that sat with them for about a week several members of their accounting department understanding their internal controls. And so it made for some really interesting conversations. She came back to me and she said, now Julia, I've got a situation where I've got an administrator secretary. She's the one that goes to the post office and she's the one that gets the mail. And she says that sometimes in the mail they get cash, but she's also the one that goes to the bank and makes the deposit. Is that a problem? I said, well, yeah, it's a problem, and don't you think? I said, what's preventing her? No one else is seeing that process. What's to prevent her from not putting the $5 in her pocket? It's not going to be anything major, and it's a religious organization, so I'm sure that no one there is, is all good-minded or whatever, but the opportunity still exists. And so as a result, they're going to get a nice little internal control memo in their audit report that's going to say, hey, you need to develop some segregation of duties. The same person that's getting the mail every day does not need to be the same person that's making the deposit. And so that you begin to really segregate the cash receipt cycle from the cash disbursement cycle. So that's more the cash coming into the organization. On the flip side of that, cash leaving the organization, we've implemented some additional procedures in our testing to make sure that whatever they say their process is, what is their approval process for getting a check? Does it require dual signatures? Is there a board member that's coming through there and looking at the financials on a regular basis, making sure that, okay, we can pay X, Y, and Z checks, that those are fine, those vendors are fine. And so in our expense testing, we're looking closely at that and making sure that they are paying people that would be part of the purpose of the organization, that makes sense. And so, I think oftentimes you can't audit, you can't do the same thing over and over and over again and just kind of make it become habitual, because that's when the risk is the highest. But you've got to be looking at things critically and making sure, does this make sense? Would they be paying this vendor? From a vendor side, then always there's a concern of fake employees creating fraudulent employees in a system. And so we look at payroll very closely. We go all the way back to payroll record or personnel files to make sure that, oftentimes the board had approved someone's budget to make sure that, first of all, someone's not being overpaid, and second of all, that there's not a fraudulent employee in there. So those are just a couple of the things that we've added to our testing to make sure that those things are in place. But I think primarily what makes our job the best, or the best way to start out for us, is making sure that we have a good understanding of what controls they have in place, and then that really helps us tailor our audit procedures accordingly.
So from a tax guy asking an audit question, because I don't do audits, but
Okay.
you told the story about the religious organization. You got an individual going to get the mail, they get cash. Segregation of duties, I get all that. What kind of control could you put in place to prevent the person who's getting the mail from just, other than two people have to go get the mail together, from putting that cash in their pocket? I guess the point is,
There's always,
fraud is far wider than, there's no control that you can come up with that's going to catch everything.
right,
And that's why accounting firms are constantly on their toes,
absolutely.
trying to come up with these new systems, there's new regulations, we're implementing new things all the time, trying to catch these things, because Sarbanes-Oxley didn't exist prior to 2001. Nobody knew what nobody cared. It was just all these, big ticket accounting fraud situations happened probably before some of y'all were born, and all of a sudden it's this huge, Sarbanes-Oxley, and then all these regulations roll out, but there's always going to be, somebody's always going to be ahead of the curve, I guess, so to speak, in that regard. And
Absolutely.
you're constantly chasing them in the accounting world.
And I mentioned, we read whatever the news article is and go, okay, we need to make sure that we're doing that in our audit. Well, the next organization that we go to, that may not be the scheme that they're running. Not to say that all of them are evil and running schemes, but
But you have to treat, you
but
have
you
to
have
approach
to
it,
think
you
that
have to
way.
approach it as if they are.
Yeah,
So that's the professional skepticism, is that right?
absolutely.
So-
And in line of I feel like coming out of school, you hear about Enron, you hear about WorldCom, and you're like, you think fraud's really big, and that if you're gonna catch fraud, it's gonna be something that's really drastic, and it's gonna be, you're gonna be Cynthia Cooper on the front page of the newspaper.
That's right.
When really it's not always, and it can be that, absolutely, but in the day-to-day, it's gonna be a lot of times something simple, not really hard to find. You just have to open your eyes, especially, you know, like on the internal operation side, we look at expense reports, and I've seen things as simple as a guy turned in a receipt for $30 for the association to repay it. You look at the receipt, it's for $30 of tobacco products from the gas station. That's misappropriation of funds. Or you see things occasionally of an employee has a company vehicle, yet on their expense report they're being paid personal mileage. Why would they be getting money back for driving their company car? So a lot of times,
much easier to rationalize a small lie or a small $30 here, $20 there for cigarettes or whatever it was, as opposed to I'm going to go to the petty cash store and steal $5,000.
Right.
So that's part of it.
We another farm credit little deal. I was doing expense testing, and I came across this expense for $13,000 for this loan officer. That's kind of weird. I started digging into it and see that it was a fishing charter trip that he had booked for his clients, and he was going to expense it. And then the chain of emails, the approval emails, which there weren't really any approval emails. I found an email from the loan officer to the EP lady saying, hey, you know, make this check out to X and X Charters, but you can send it to my house here to my address. And that was like immediately a big red flag there, because you know you don't want to send an expense reimbursement back to the person who filed the expense report. And it turned out it was all good. This was a trip that this guy took with his clients every year. President knew of it, even though he didn't specifically approve it, in which we dinged him on a SOX finding. But anyway, so that maybe not fraud that turned out bad, but it could have turned out bad if that guy had kept doing it. And you got to stay on your toes. They talked about that. Very unsuspecting. One of the farm credit loans that I looked at, they were lending money, operating money to this small ag dealership, selling ag equipment. And the bookkeeper was the guy's, it was either his aunt or his mother-in-law one way. She's like 73 years old. And they finally realized one day they got a letter from the state of Mississippi saying, hey, you owe us $400,000 in sales tax that you haven't paid. Where is it? And this sweet little old lady this whole time had been filing everything up, getting everything looking right for the sales tax forms, and then acting like she was cutting a check. Didn't actually cut the check, but still made the expense go through because she would cut another check to herself. And ended up totaling over $400,000 this lady had accumulated over, it was close to 10 years. But so even your grandmother might be stealing. Stay on top of it. But this kind of, the company that this happened to, they were so small, it wasn't effective for them to have a strong set of internal controls because they're so small. But it happens everywhere. If somebody wants to commit fraud, they're going to commit it. They're going to find a way to commit it.
Yeah, and one of the things, so I work primarily in our tax department, and Harrison works there pretty much full-time with us now as well. And so one of the things that we're dealing with more than, like I said earlier, when you think of tax fraud, you think of evasion, and, for the most part, yes, that happens. Those people go to prison, but, most accounting firms are going to try to steer clear of that kind of thing. So, obviously, if there's nothing to prevent a client, though, from a tax standpoint, with walking in with falsified documents, with, a lot of times, a lot of compliance information on a tax return is still, it's based on what the client tells you. They sign those tax returns under penalties of perjury, meaning, if we knowingly file something that's wrong, yes, that's on us, but otherwise, that's 100% on the client. So there's certain forms of fraud and evasion that can exist in that, but typically what we're dealing with now on the tax side more than anything is honestly, it's cyber fraud. And so outside of these, you'll probably get spam on your email and everything every day. Well, one of the things that we're consistently dealing with, we get requests all the time, send so-and-so's, send Joe Bob's tax returns for 2016, 2017, 2018 to this banker. And you have to be very careful. A lot of times we're constantly getting emails from our IT department. We actually have a banner that goes across our email now, and I don't know, I can't tell you verbatim what it says, but it's something to the effect of this was not generated within your office. And it's some provision that our IT department has put on there for us to know that if Julia sends me an email and says, hey, can you send me, ABC Company's 990, that banner, I think it actually says this did not come from within your office.
Yeah, it's
email.
an external.
It's an immediate red flag. Whoa, this isn't Julia. Who is this? And you have to be, I mean, it could be as simple as her email's jbradley@hrkcpa.com, and this is jbradley@hrkcpa.net or something. They're ghosting email addresses. They're coming in asking for documentation. And so what happens is you have situations where you may inadvertently send a tax return that's got social security numbers for a married couple, their 4 kids, all their address information, and you've made a huge boo-boo. Sending that bank account information that they can pull out, and so it's very little, cuts here on the tax side where we see that. Like I said, it's mostly has to do with the same kind of stuff that the IT side is dealing with, where it's people getting ahead. They got a lot of refund fraud is a very big one, where people will steal social security numbers, and I want to strangle these people because the amount of work that it creates for you on the back end is, we can get to a point where we'll file somebody's tax return in mid-February, and you'll immediately get an error the next morning. They've already filed. Well, no, they haven't. I know they haven't filed. Well, it turns out somehow, and it could be a year ago, we could have forwarded their email to someone we thought was a banker at Bancorp South, and it turns out it was, some company and, set up upstate New York, some farm where they steal social security numbers, which happens. And so you don't find out till the next year, and then it's usually a 3 to 5 year process getting these people out of this identity fraud that has occurred. And they go through, you have to have PIN numbers every year, and it's a new number. It's a 6-digit number that they mail you every year, and 9 times out of 10, the client doesn't know where it is. They don't remember getting it. You can't file the return without it, so you go through all that. I've been on phone calls with the IRS has an identity fraud center in Boston, Massachusetts. That's all they do is handle identity fraud. Well, the ID theft has gotten so bad that the IRS now refuses to, even if a client signs a tax return and says, I give Cecil Harper, who is the Harper in HRK, authority to discuss my tax return with you, they still won't do it. They require either a power of attorney or some other form so you have to go through all these processes, get the client up to the office, sign this, or email it to them, sign this, send it back. These documents have their social security numbers all over it. You call these companies, or the call centers with the IRS, and you go through these painful phone calls. The first time we ever did it, we tried to do it without the client because we thought, hey, this will be fine. They'll ask us some questions from the tax return. Very first question was, what street did you grow up on in 3rd grade? For this lady who is just a client of ours. I had no idea. We said, Smith Street. No, I'm sorry. So we hung up the phone on us. Take it, 4th Street, I don't know. And so now we've learned, okay, we have to set up time, get the client up to the office, get them in the conference room, make this call, and it's 3 questions, and they're obscure, like, what, have you ever lived on this street? Or, we're going to list 4 cities. Tell us one of which you've lived in. So and you've probably done some of this online for, if you've forgotten your password before or something. But it's that kind of stuff that from that standpoint, the fraud situations that we're dealing with in the tax department, to me, they're a nuisance. They create massive headaches, and usually it's a product of somebody stealing a social security number so they can go out and claim an earned income credit or some other form of credit, and they get the refund early, and then you go through 3 to 5 years of pain trying to fix it for the client. It costs the client thousands of dollars, all because someone wasn't careful or with pertinent information. We've got another one, a client, real quick, that a fairly large law firm that they probably have, I would say, 200 to 300 employees. And their controller or someone in their department one day got an email from someone claiming to be from the insurance company saying that they needed the W-2s to verify some information. She clicked the button, uploaded every single one of them, sent them out. They had 225 cases of identity theft because that was not an insurance company. So that one provided several painful years. The firm itself had to go in and obviously pay for Equifax and Experian and all these breaches for their employees, and so they foot the bill for. Not all of these people were clients of ours, obviously, so they foot the bill for them going to their different accounting firms. And thankfully, it was a harmless mistake on her end, but it's just kind of an example of the domino effect that can happen from the people. the willful intent to commit fraud, like we're saying, somebody who's, like I said, if we could find them, you know, there's probably a group of CPAs who have dealt with the call center in Boston who would take care of these people for them, but unfortunately, we don't know where they are, we don't know how to track them down if they did. But I know they did bust, last summer, they busted a farm, like I said, in upstate New York, that had about 300 people there in a call center, and they were specifically there working on ways to steal people's identities, solely for the purpose of committing tax fraud. So that's really one of the biggest, we're actually coming up on time. We do some other litigation type stuff, but there's not as much fraud. That's more, we're working with attorney groups to kind of do things that they've asked us to go in and do. For the most part, you're doing some forensic accounting there, but it's not so much investigating fraud as it is. Usually it's a divorcing couple that's arguing back and forth over funds or something like that, so you don't see that as much. But they definitely want to have some time for Q&A if you've got any questions at all for any of us kind of about something we've said, something that wasn't clear.
I have a question.
Sure.
Okay, so I don't know how this works, like, if the fraud is a really big deal and the authorities, getting them involved, like, does the accounting firm do that, or does the client, like, management, how does that all work? If
So
any of
you're
you
talking
know.
about from a tax standpoint or any of it? From the audit standpoint, I guess it would, probably, I would say yes, and I guess Robert wasn't there when that gentleman on the Farm Credit side he was probably escorted out of the building, I'm sure, and obviously he went to prison. So.
I mean, do you guys inform the authorities, like?
We talk management.
And then
Management.
they have to do something?
In their case, it's either management or there should be, a lot of times, especially with the nonprofits, there's a board of directors or there's even an audit committee that's a subset of that board that you would report to. Obviously, from the tax side, we just notify the client, hey, someone has stolen your identity or something like that. But there's steps you take when someone is a victim of identity theft on the tax side, and that is you contact the, like I said, Equifax, Experian, and those. And we typically will put it back on the client to do that. They contact them, they contact the local police, and typically we will then, contact the client and let them go through, those steps. But yes, they very quickly will contact the IRS, the local police, and credit authority agencies just to make sure that everything is.
I know all of our financial institutions, they have really, really strong word whistleblower policy set in place. They have a whistleblower hotline where if somebody either internally or externally feels like they've, found fraud somewhere, they call this hotline, and the hotline basically goes straight to, within the board of directors, most of these financial institutions have an audit committee, and on the audit committee, there's an independent third-party board of directors. So a lot of times that whistleblower email or hotline voicemail goes straight to that guy, and he figures out the correct avenue to do it. So.
Yeah, the board of directors are supposed to stay, it's, the whole idea behind it is this is an independent, I'm on the board of directors for the United Way of Central Mississippi in Jackson, and so I'm on the finance committee / audit committee for that. Well, I don't have, yes, I know the people that work there and all, but if an employee came to me with that information, well, I have a duty to report that. I'm not gonna, okay, well, sorry, he's my friend, I don't care. Well, no, that's not, that could come back to haunt me, obviously. So that's the reason you have these independent boards and these independent people, and you get, most of the time attorneys and CPAs and different people from different backgrounds, but reputable professions, hopefully, that will take the job seriously. And so if something like that is reported to you, you take steps to make sure that gets taken care of, rather than having to go to your superior who's committing the fraud or who you suspect is committing the fraud and saying, I know what you're doing. At that point, it can get a little messy.
And an added measure we've seen in Farm Credit that the FCA has been hitting really hard on is criminal referral. So a lot of times with people that are coming to get money, there's the opportunity that they may be doing something illegal, may not be filing their taxes, may not be reporting income. So these Farm Credit banks have policies and procedures in place for if even something as simple as their customers are doing illegal things or committing fraud one way or another, they have a policy for that to be that information to be passed on and handled in an appropriate manner.
That's good. What other questions y'all have?
So it's more like a general question, but I know you mentioned a lot of you work in like specialty areas. So I was just curious like how you got started working in that specialty area and what you enjoy the most about working there.
We can each take that. Just start with Harrison. Go.
I've kind of done a little bit of everything.
Yeah.
I started out in Farm Credit, And then did tax during tax season, loved tax, spot opened up on tax. Kind of took that full time, but my farm credit experience rolled into this little SOX compliance deal that we do. But on the tax side, that also involves, I prepare reviews and compilations for clients and do a bunch of little special projects, kind of general business consulting. And I guess how did I get started? Farm credit, I'm a big hunter, and I worked at Mississippi Ag right out of school. I was an internal accountant for them, and just kind of got to know the area. So I mean, I grew up in high school. I was always out hanging out with farmers because that's who hunts mostly. And met up with these guys at Meet the Firms, and Sean, who's not here today, bless his heart, he talked about farm credit and heard that I worked at Mississippi Ag and said, "Oh, dude, you're gonna love this." I jumped right in it, and I did. It was great. Got a lot of travel, a lot of good experience. And the tax is just great. It's funny. I thought after Ole Miss, after taking income tax, man, I was like, "There's no way I'm gonna get tax. This stuff is horrible." And then actually get out and practice, it's great. So don't write it on.
What about you, Steve?
Well, how I got started isn't as glamorous as him. I got to the office my first day and they said, "Go downtown." So that's how I got started doing the government compliance thing. But it's kind of cool because, like he said, I kind of get to travel a little bit. Got to go down to the coast a lot. And then some of the other kind of federal work I do, I was actually in Oregon and Washington 2 weeks ago. So I get to travel a little bit, get those frequent flyer miles, which are awesome. And just kind of get to see different parts of the country, get to see different things every day. With most accounting work, I'd say you don't see the same thing every day, but I'd say probably in these little niche spots that we have, it's probably even more so the case.
I kind of much in the same as Harrison, and I guess when I was in grad school, I didn't have a job. I knew Harrison from Ole Miss, and met up with HRK, and Harrison said, "You love farm credit, you should do it." And so I didn't really know what farm credit was at that point. Didn't know what I was getting myself into, but getting to travel is really nice. We go all the way to Kansas, from Kansas or New Mexico, I'm not sure which one's further west, up to Vermont, and have clients all the way in between. So we get to travel, and I think it's really interesting just seeing how diverse agriculture is across America. You go to these places where you wouldn't think that agriculture would be
Tree nuts in California, and chicken houses. And
yeah, you got chicken houses across the southeast to vineyards in Virginia to
It's all,
cattle.
all agriculture.
Yeah, it's very broad and encompassing.
One of the cool things you asked what we liked about the farm credit that I thought was awesome is that you're fresh out to be 24, 25 years old. What you're working on is you were talking directly to CFO, CEO, controller of these multi-billion-dollar banks, and so you're getting a lot of good exposure there. You're getting a lot of, if you're a sponge, you absorb a lot.
So I work on the audit side, and it was just a matter of what jobs kind of opened up, and the longer that I stuck around, I kind of became the not-for-profit person. So anytime we've inherited a new not-for-profit, it's like, oh, Joy can do that. So that's kind of how that's evolved. But one of the things that I really enjoy about my job is that I am somewhere different every 2 to 3 weeks. My friends and family try to keep up with where I am, and I'm like, you're just not. I rarely, even at my desk, I was telling a client this morning, she called me on my office phone and said, "Please don't call me on my office phone, I'm rarely there." And so I actually really enjoy that of being really mobile and doing a lot of different things. I'm primarily in the metro area, but do have the opportunity to travel on some of the federal jobs that Steve mentioned earlier, and so those are gearing up, and that's really fun to get to see some different parts of the country and build those hotel points and airline miles.
I've only been at work for 2 months, so I've done a few compilations and a little bit of government work. Right now I'm working on a life insurance, looking at their investments and stuff, so I'm getting my feet wet, I guess. And I'm doing audit, and so I'm kind of excited just to learn and see how different businesses and institutions work. So yeah.
Yeah, and a lot of y'all, when you get into out of school and you finish your master's degree and you get into that line of work and you're going to be right where Sarah is now, a lot of what happens in the accounting industry, honestly, is I'll call it right place, right time, or whatever it is. And for me, that's 100%. There is no glamour whatsoever in my story. I graduated in December from Ole Miss with a master's in taxation, and I found a firm that needed a tax accountant in January. That's it. And so I said, I'll take these guys, and been with them ever since. That was 11 years ago. And so I said, a lot of times it is, we're a firm that, we love to identify these things about different people that they, it's kind of a niche, it's something that they gravitate towards. But at the same time, when we go through the process of bringing people in and going through that, if we try to identify those things, Harrison's big outdoorsman, big hunter would do well with these farmers. Well, then he gets into the tax department, and that's just one example of, we identified him for one thing, he did that for 2 years, all of a sudden he's doing a great job in tax, we love having him, okay, well, come on over here and do this full time. And so there's different ways to go about, getting there, but for the most part, that initial, how you get into it and where you get, most of the time, it's really firm dependent. It's dependent upon what where the work is, what is needed. But for the most part, I think as you all go through the process, firms typically will try to be upfront with you about what they foresee you doing. And so I think that's probably the most important thing is find that niche area that you feel like, at least starting out, sounds the most appealing.
Now you mentioned firm dependent, I'm gonna sell it real quick. One of the best things about HRK is we're the perfect size that we have a ton of different clients in just about every single industry you can imagine. But we're small enough that you're gonna get exposure to just about any of them you want to. So if there is an interest, if there is a company like 990 came across my desk, non-tax exempt organization the other day, Julia picked it up, said, Hank, we got to file this 990. I heard Hank talk about it. That is an organization that I actually really like. Said, hey, man, can I work on it? He said, it's all you. So
and you'll see that it's different, different mentalities upon, where you end up. But yes, you'll have smaller regional size firms, anywhere from 100 employees or less, basically, which we fall under, where you'll have that, you're going to get your feet wet in a lot of different things. And so it's more of a, you've got this broad approach to what you do, and that's what I do tax work, I do litigation support, compliance work, I've done some governmental work. You just kind of go through, you do different things to fill up your bucket to get through the year, to get your 2,400 hours, whatever it is you're working. You get into bigger firms, there's different approaches that will be taken that will get you to the same end result, and maybe a little more specialization there, a little more niche. But I think industry-wide, a lot of times it is more about person meeting than anything else, which is, but ideally, like I said, you get in and within a 2 to 3 year period, you either find your niche or you move on and, look for it elsewhere. It's kind of the way it typically works. And for the most part, that's what you see across the industry. Good question.
Does anyone have any other questions? All right, let's give our speakers a round of applause. And then we have some goodie bags here for y'all
Okay.
from the Patterson School of Accountancy.
We appreciate it.
Yes. I'm not sure what's in them, but Ole Miss swag.
Okay. Thank you very much. And will y'all each take another Chick-fil-A box back to your dorm, or your dorm, whatever, your apartment? Thank y'all so much. Appreciate it.
And then if y'all didn't sign in, please make sure to do so. And our Sardis cleanup event is next Friday, November 1st, and you should be getting emails about a poll to say if you're going to come or not. So please be sure to fill that out before tomorrow at noon. And have a good night. Thank you.